Today on the CEO Barbecue, we're looking for tungsten in Portugal together with allied critical metals. If you want a bullet point summary of this and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, although the company you're about to hear from has not paid us for the production of this interview, you should still not treat this video as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. In any case, please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is an extremely tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, and it is also going to contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. Although this company has not paid for the production of this interview, it doesn't mean they won't become a client in the future. They might. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Allied Critical is listed as ACM on the CSE, where over the last 3 months, the average volume has been about 166,000 shares. And I say over the last 3 months, but the company's not even been trading for 3 months. So this is just the average volume essentially since it has been trading. This is where I normally walk you through the stock's 52-week high and its 52-week low. But again, 52-week high would be 31 cents, 52-week low would be zero technically because company's only been listed for about a month and a half now. So there's not much sense going over that. With a market cap of just over 30 million Canadian dollars today and about 110 million shares outstanding, this is now a 28-cent stock. Again, I normally give you the 50 and the 200-day moving averages here, but they're both at 22.5 cents because the stock's not been trading for 50 or for 200 days either. About 15% of the company is in the hands of insiders. About 25% is in the hands of institutions. But I do see almost 25.5 million warrants at 25 cents, a good chunk of it, and then a good chunk of it is at 30 cents. There's another one at about 40 cents, which in total brings the number of fully diluted shares to about 135 million, meaning an increase of about 22% in shares outstanding could occur if all the dilutive securities get exercised, which would then result in about an 18% ownership dilution. If, and that is always a big if, of course, but if all dilutive securities get exercised. And of course, none of this accounts for potential capital raises and dilution later down the road, which is not unlikely given that this is a pre-revenue company that operates in what is a very capital intensive industry. Talking about capital, again, this is where I normally go through the financials to provide more insight into the cash and the debt situation of the company, as well as their spending habits and the exploration to administration ratio. But in this case, that won't be a very fruitful endeavor because, again, they've only been public for a short little while, which means that the responsibility falls on you as a listener or a viewer to visit setterplus.ca and look at their financials sometime soon. And also stick around for the latter part of the conversation or use the timestamps provided in the description of this video to get a better understanding of how the company's financials function. Instead of talking about accounting, I'll briefly tell you about the company itself. Now, Allied Critical is a tungsten-focused company, as I mentioned earlier, specifically looking at resurrecting the past-producing Borala tungsten mine in northern Portugal. What this is a breccia pipe system. Essentially, it's carrying 5 million tons of 0.22% WO3 in the indicated category and another 7 million tons of 0.2% WO3 in the inferred category, with modest copper and silver credits as well, which I'm hoping to touch upon later on in the conversation. The pitch I got to hear from them during the German Gold Conference about a month ago was that this is a near-term, low-capex, quarry-style restart of a mine, beginning with an $8 million pilot plant aimed at gravity magnetic recoveries of 65% tungsten concentrate. They also told me that this is not everything because they believe the resource has got room to grow, and to figure out if that's real or not is why I've got you here today, Roy, and I'll try to shut up already and let you do the talking. But first of all, thank you for being here.
Thank you, Antonio. Thank you for having me.
The pleasure is all mine, and the pleasure is mine because I'm not going to be on the grill, I'm going to be behind it. And but since this is your first time on the barbecue, if you will, we'll have to kick it off with a smell test before the coals have gotten hot enough. And I'll have to start off with the man running the company himself. Who are you, and have you made money for shareholders before?
Well, this is my third project in the last 5 years. The projects that I've done immediately before this were in the gold exploration space. I was the first CEO and one of the founders of Thesis Gold, which is TAU on the TSX Venture Exchange, which I then moved up to the chairman position. And then once we merged with Benchmark Metals, I stepped down from that position in the board. And that was the situation at TAU, where we went from roughly a $10 million market cap to today, I think we're about 260 million. After that, I was also a founder of Founders Metals, FDR, on the TSX Venture Exchange. Another great example of where you can start at a $10 million roughly market cap. And today it's trading at around a $500 million market cap. So this is a step out from the comfortable world of gold exploration into the exciting world of critical metals. But we're trying to use what we've learned in those last two successes and apply it in this situation.
That's exactly what I was going to ask. I was going to be like, did you get tired of pitching high grade gold in a low cost jurisdiction like Founders, or did you get tired of pitching gold in a stable jurisdiction like Canada, and then you wanted something more challenging? And now you're pitching tungsten in Europe. We'll talk about actually when I'll ask you to give me sort of the background of the asset here, and then maybe you can tell me about your history more there, about why you'd even join this company in the first place. But again, it seems like you like starting and running companies. Do you currently hold any other executive or board positions with other companies?
No real active companies. I'm on the board of a couple of publicly traded shells, but nothing really active in the space. My focus is on taking this particular asset and doing the same type of value accretion exercise that we did in the last two.
Insider ownership here is noted as 15% of the company. What percentage of that is you personally?
I guess I'm probably about a third of that. I have about, I think about 9 million shares currently.
Okay. How did you get those shares? Is it founder shares or bought in the open market and financings? How did that work?
So all three. I mean, I have founder shares, which are 100% escrowed for the next 2 years. I also have shares that I wrote a check for, and also that I took in lieu of salary. I'm a big believer in the space of making your money with other shareholders. And I think if you choose the right projects, you can, 10 times your money, as I have certainly in the last couple of projects.
So you're not taking a salary right now?
Not at the moment, no.
Okay, interesting.
When you're starting off, I mean, it's just the value is in putting money into the ground, and that's where you can create the most value, not only for your shareholders, but for yourself.
How much capital have you raised since you started Allied?
So privately, we raised about $4 million before we did a public listing, and then we did a concurrent financing along with our public listing, and we raised about 4.6 million at that time. And we've only been listed, I think, if you noted, for about 4 to 5 weeks. So this is a brand new story, just at the start of that exercise that we were just describing.
Yeah. So what you've raised then in total, $8.5 million to round it up down. Yeah. Okay. So what percentage of that money have you provided then? What I'm looking for here, or why I'm going with these questions, is, again, you own about 7% of the company. What percentage of the capital have you provided to represent that?
Oh, I guess, most of my, I invested in both rounds. I guess in total, I've probably put in about $300,000 to $350,000 in real capital.
Oh, okay. So that would actually put you at about 5. Okay. Yeah. What I'm essentially looking for here is like have you provided 1% of the capital, but then you own 70% of the company and mismatches like that, which again, it's not the case.
That's certainly not the case. No, and
Yeah.
in fact, we did a round. As I said, there was the founder shares, which were done at a low price, which are 100% escrow for everybody for the next 2 years. Then we did a private round, and we did that at a 10-cent valuation, and those are all under escrow as well. I believe it's a 4-year escrow according to the exchange regulations around escrows. And then we did a 20-cent round concurrent with the going public transaction, and those are not escrowed. Those are, in fact, I believe, the only shares that are truly free trading right now. So when you note that total number of shares fully diluted, really it's only those 20-cent shares that are trading for the next little while.
Well, it looks like you don't hate your shareholders, which is actually, unfortunately, a rarity in the Canadian markets.
I am a shareholder. I'm a shareholder first.
Okay, but so is the idea then, Roy, for you to keep that 7%? Like, are you going to be buying in the open market or participating in future financings as well?
Well, I certainly hope so. All my money I've made in my previous investments have been from being a shareholder. And as I said, these investments are escrowed long term, and my expectation is that I will continue to participate along with other potential investors going forward.
What about the rest of your team? So insider ownership again, about 15%. You own about half of that. Who owns the other half?
Oh, I think everybody is a shareholder on our management team, especially the board. So we have everyone is an important shareholder as we move forward.
Well, we're talking about the team. This is a bit of a unique situation because tungsten is not so widely, talked about or really explored for. If I understand it correctly, what kind of a technical team do you need to make it work? And do you have that team who's worked and been successful in tungsten projects before?
Yeah, I mean, we're fortunate because there is a long history of tungsten mining in northern Portugal. So our technical team, which is led by João Barros, who is also our COO and president of the company in Portugal, is well versed in tungsten. They've all worked on tungsten deposits previously. They all have a strong attachment, not only to tungsten but to the deposits that we're operating on. So uniquely, unlike other places in the world where they're trying to reopen tungsten mines or look for new tungsten mines, we actually have a team that has a deep experience in the field of tungsten.
When you say deep experience in the field of tungsten, is that only one person, I mean the CEO, or is it also the technical team and the people on the ground?
No, it's not just Shao. I mean, we've got, for instance, a geologist who's in the process of doing his PhD at the University of Porto and on the metallurgy on our deposit. So, as I said, we're fortunate that not only do we have a team that's technically skilled, but very familiar with this deposit, which historically is the largest tungsten deposit in Portugal. So it is well known, and it is deeply associated with the region in which we're operating. So that also makes it very exciting for us because everybody is well versed in this particular deposit.
Well, I am going to get to the history of the asset here as well, because that is interesting. It was in operation for about 80 years, if I'm not mistaken. So we'll talk about that here in a minute. What's the royalty situation right now? And do you or any of the other insiders or executives own a royalty in any of the project personally?
No, the company owns 100% of the project and there is no royalty.
Okay, not at all. None of the historic stuff carries any royalties or anything like that?
No. Okay. No royalty.
You said again you're not compensated. What about the rest of the board and executives? Does anybody provide services to the company? And I'm talking about outside of the regular management activity. But is there anything like, I don't know, helicopters or camps or something else that any of the insiders are providing as a service to Allied?
No, I mean the technical team in Braga is paid, but in terms of the top, in terms of the board, there is no helicopters or other type of sometimes you see people who own companies to set up camps, for example, or that type of thing. But there's nothing like that. No.
Yeah. Well, I actually like the fact or the way you're reacting to these questions, which I call them my smell test questions that I ask everyone. But to you, they're almost like, who would do that? And that's kind of the right approach.
No, I've seen that before. So unfortunately, I know there are people who do that. Just no.
Yeah. Well, how's that going to change in the future? I mean, again, insiders, they at a certain point they have to be compensated. But given that you have this more of a different strategy than most juniors I talk to, where you actually want to get into production, and we'll be talking about that later as well. But how are you going to measure success in the meantime, and how are you going to couple insiders and executives' compensation to represent that success?
Well, I think eventually we're going to have to normalize the situation, and the board and the executives are going to move to a situation where they are actually paid for their time. So that is coming, and that will be done in a manner that is relative to how other companies compensate their employees and their management. Obviously, you want to put your company in a situation where you're not overpaying, but where you're not losing good people to other companies. Mm-hmm. So normally what you do is you have somebody come in and give you an estimate of what similar companies are paying for similar positions, and then you choose a percentile at which you want to pay your company that's high enough where you're rewarding them for their good work, but you're not overcompensating, but it's not so low that you're going to lose them to other companies who see they're doing a good job and want to headhunt them.
Yeah, totally. And what I'm really asking for here is, what is that part going to be based on? Is it going to be, production or development milestones, or permitting milestones, or discovery milestones, different for the different companies? So what is that for you?
Well, whenever you have a startup, it's a bit of an art more than it is any type of real rules to follow. So it also depends on how much time everybody is participating, and ultimately how much money do we have in the bank account. Right now, as I said, I think the money in the bank account is best spent on developing not only the size of the deposit, but also advancing towards production as quickly as we can. But do we have a plan set out that X employee is going to get so many dollars at a certain point in time when we reach? No, we don't, because it's a bit of as I said, an art, depending on where we are on various touchstones in terms of the development of the company.
So you don't have any fees in place that would trigger if you sell the company or anything like that?
No, you mean like no, not at this point. I think this company is a tremendous opportunity for a larger company in the space to acquire it. But as of this time, we haven't set up anything like that, any type of poison pill, either on a corporate level or on a employee level.
Yeah. So essentially, yeah, what I asked here, maybe I wasn't clear, but it was change of control fees. And what you're saying here is, no, those change of control fees, they're not there yet. And this might actually be a good segue, Roy, into the section where we talk specifically about the business plan. But just before that, talk to me about the history of the asset, and more specifically what I'm looking for, especially with assets that are getting resurrected or restarted. If it's as good as you believe it to be, why has nobody brought it back into production already or before you did? Because it's been sitting there for over 40 years now. So talk to me about what happened in the meantime.
Yeah. So Beralia specifically was in production from 1904 to 1986. It was historically the largest tungsten mine in Portugal, producing over 10,000 tons of concentrate with an average grade of about 66%, which was used widely for military and industrial purposes. In 1986, it was really around the time when tungsten prices hit their all-time low. Borealia shut down in '86. Our other property, Villa Verde, which contains the Val de Gatas mine, which was historically the third largest tungsten mine in Portugal, also shut down about that period of time. Prices were at an all-time low. The Chinese were starting to come into the market with much, much lower priced tungsten, as was their strategy for so many other critical metals and rare earths that are essential to our economy. It was, for them, it was more about acquiring market share than it was about maximizing profits. So, the Western system, which kind of focused on profitable mining, had to take a back seat to the idea of the Chinese providing industry with a much lower priced tungsten. Now, in the long term, it wasn't probably the best strategy, but essentially at that time when there was so much cheap tungsten available, it resulted in many mines, not only in Portugal, but in Spain and other places, shutting down. And they have been shut down for about 40 years now, if my math is correct. And we are now seeing the results of that, whereby we're in a very vulnerable position in Western countries, industrially and militarily, because we have virtually no tungsten production whatsoever. I think it's 90% of tungsten production right now is coming from China and Russia. So it probably wasn't a great strategy, but that's essentially what led to the decline and eventually the shuttering of these mines in northern Portugal.
And the tungsten market is something that I hope we'll touch upon later on as well. But going back to the history specifically of your asset here, at least your flagship, are there any skeletons in the closet? What I'm looking for here is, again, liabilities maybe that you're inheriting with this asset, community, ESG related, anything else?
What's very nice about our assets is there are really no nasties. The tailings which are there are inert and are used locally as aggregate for roads. The production historically and currently, as we're planning it, is really just mechanical separation. So that there's no real chemical issues around that either. We've done water testing, et cetera, to confirm that there's no sort of lingering problems, and there are none. So, it's a very clean type of mining as compared to other methods that require chemicals or extremely high temperatures or pressure in order to extract the minerals. That's not the case here, thank goodness.
What about acid drainage, though? I mean, I saw an article which it was in Portuguese, so I might be getting this correctly. That's why I'm asking you. But they were talking about there still being heightened levels of acid in the Rabagão and Barala rivers from historic operations there. Is that actually the case? Am I getting this correctly? And if it is that something that you have to deal with?
Well, we've done water testing, and there doesn't seem to be any issues around that at all. And we've submitted those to the government. So we haven't seen those type of issues at all.
So there's no way for the government to force you to do or co-fund any type of cleanups or escrow or a bond or anything like that. Anything that might occur.
There's no cleanup. There's no cleanup that has to be done. As I said, everything there seems to be pretty much inert, and we've done water tests, et cetera, and there's no environmental issues historically that we have to deal with.
What about the local communities? How do they look at this? And why I'm asking this is because, again, just kind of Googling some stuff with the Barala mine, I saw up in 2022, public consultation seems to have logged 154 formal objections and a petition with over 1,300 signatures of people concerned about water and tourism in the region related to mining. What's that? I mean, does that mean that you need any type of special licenses or agreements with the locals, or what does that look like?
So we have really strong social support locally, including the local government. I can tell you that this is a mining region. I mean, you drive into the villages, and the first thing you see is a statue to Santa Barbara, the patron saint of mining. People are very positively inclined towards mining. Just about everybody's family at one time worked at one of those two mines, and they associate, the good old days with when the mine was open. We've held a number of public consultations, and we, it has been very receptive. I mean, there was a little bit of hesitancy when we started, but, we seem to have won most of those people over. What we do, and in Portugal, everything starts locally. So if you have strong local support, then your permitting process moves forward relatively easily. So, and that's been our case. And since we started this project in 2023, we've had no real opposition from the locals who live there. Now, there's some people who drive up from Lisbon or whatever and are present at just about every public consultation there is, who are less agreeable to the whole idea of mining, but mining in general, not just mining here specifically. They're opposed to all mining, but certainly in our case, we've got very, very strong support from the people in the local communities.
So this 2022 petition or whatever it might be, public consultation that had these formal objections that I told you about, that's you've been able to explain that away to the locals, or what is it that I'm seeing here?
That's not something that I've seen starting in 2023, and I can tell you we've had a number of meetings since then. But certainly, if you want to dig deeper into that, we can talk to Zhao and his team locally. Everything we've done has been around giving the locals the comfort that this is not going to be an intrusive mine. The one of our two properties, Boralia, which is closer to the villages, we're going to keep underground. We've submitted mining plans which were accepted, and they were quite excited about it as we see a life for that as actually a outdoor stadium or park afterwards. On our property, and has been on our property for quite some time, there's a whole museum about the history of this of Boralia and tungsten mining there. And at certain times in history, there's been 500-600 people working at this site. So understand that this is not a greenfield project where we're digging up fresh ground. This is a long historic mining site in communities that understand and have been part of mining for quite some time.
I think also what I found online, the sort of the Now As Minas movement, basically no mines essentially is what they're calling for, throws everything together in the same bucket. I think a lot of it comes from the lithium side of things, because there is lithium, the proposed lithium mines in Portugal as well. And they're saying that it's a threat to the UNESCO listed Barroso farming, essentially. Is that something that's close to you, that UNESCO listed Barroso farming? What is it in the first place, and is it close to you?
Well, it's south of us, and you're right. The lithium miners that have, wanting to develop open pit lithium mines in World Heritage agricultural sites are running into public opposition. That's not surprising to me. I mean,
Sure.
just like I know of other mines proposed in Portugal that were proposed for areas where they have long established vineyards, and it would mean digging up the vineyards and that type of thing. That's not surprising to me either. I don't think those objections would be any different in any other first world country. In our situation, it's different because we're not in one of those areas. We're in a historic mining area, and we're reopening a brownfield site, which has been a mining site since just after the turn of the 20th century, around 1904. So I think these are two completely different areas. But listen, that is something, especially when I was in London and Germany, that people familiar with Portuguese mining would bring up lithium miners, but lithium mining and the process of extracting lithium is a much more intrusive project than what we're proposing in terms of gravimetric separation, which is just mechanical separation. As I said before, we're running what is virtually a quarry business, and then we will be selling that 65% concentrate to smelters elsewhere. So it's not really the same level of environmental disruption at all, as opposed to what is being proposed for lithium.
So there's no vineyards or agriculture farming anywhere close to the project that might be impacted by the operations then?
No.
Well, that's unfortunate. What do you drink on site if there's no vineyards?
Well, everything's relative. It's easy. The roads in Portugal are great, so it's no problem bringing in, port from Porto, which is, a big city, but it's only an hour away from either one of our deposits. And there's the Douro Valley in the south, but we're not touching any of those. We're in the mountains in historic mining areas, but I think you can always find a good bottle of wine not too far away.
So you actually get Porto wine from Porto. That's interesting. Yeah. Well, but so
it makes for a great.
Well, we'll see if you get me down to a site visit. Eventually, we'll put that on camera too.
You can be the judge of that. I'm sure your listeners will want to hear, your due diligence into that.
Well, especially that part, yes. To that part of the business model that you were telling me about, though, Roy, here, you're looking to actually bring this into production yourself, and what do you want to do? Like operate it and then pay a dividend, or how do your shareholders make money on this thing?
Well, I mean, myself, not necessarily. I want to make sure that the right team is in place to produce and manage this. I mean, the nature of mining exploration is mitigating risk towards production, even if you're not the person who ultimately puts it into production. I mean, I think there's lots of opportunities for an M&A transaction as we move closer to production. But at the same time, as I said previously, it's not a complicated production process. So we will, in the very short term, be able to, because we're already permitted for 150,000 tons of mineralized ore on Baralia, for example. We want to put into production as soon as possible a smaller plant because we do have an LOI for an offtake with Global Tungsten Powder, which is the largest non-Chinese smelter. And we would like to start shipping them. We'd like to ship them concentrate as soon as we can. So we'd like to build a smaller plant. It'll cost us, $5 to $7.5 million US. It'll pay for itself within a year, and that will, I think, de-risk building up to the bigger plant. But certainly, part of this whole value creation exercise that we go through from, time zero to where we're actually a producer, to whatever extent we can mitigate risk as we move forward. That's our job. And the closer we get towards actually producing revenue, I think the more valuable our company in our deposit become. And but at any time, whether it's another large tungsten producer or somebody looking in the mining exploitation space that's looking to diversify its portfolio of products, there's an opportunity, I think, at any time that they could be very interested in what we're doing, just because of the increasing demand that's out there for Western sourced tungsten.
There's obviously a lot more work that you have to do before you get there and forward looking and everything, but who would that be in that case? And really why I'm asking you is because you're, again, a critical metals company based in Canada with European assets. Essentially, three things that when you mix them, essentially the outcome oftentimes means no Chinese. So is there someone else that could do M&A with you? And who would this asset fit with?
Well, there are larger companies in the space already, both large Canadian companies like Almonte, who is also producing in Portugal at their Penasquara mine. There are larger companies listed in London like Guardian, who are opening mines in the United States. There's the opportunity, just because it is such a large critical metal, that other companies in the U.S. where there is no current production would be interested, because the U.S. government, as you know, has been very aggressive in terms of searching for these critical metals, as has, quite frankly, the European Union, who has like their own critical metal policy as they're trying to become more autonomous as well. Now, whether it's going to be a smelter or someone farther down the production line, that's a possibility as well. There's also the possibility now that the Chinese have essentially shut off exportation of tungsten to the West. There are Chinese companies that still need to service their international clientele and need to find non-Chinese sources of tungsten as well to service those companies. There are companies that are actual producers that of other minerals that might look to diversify their portfolio that they can offer their clients as well. So I think there's a myriad of potential M&A partners for something like we're doing, especially if you look at how inexpensive we are compared to everybody else in our industry.
Yeah. What about the grade in that case? When I ask, like, who does this asset fit with? I'm thinking the profile of this asset, so the size and the grade as it is now, although we'll talk about how you plan on growing this. But in terms of grade, I mean, is this grade sufficient to support production and potentially attract, a purchaser at the current prices, though? Because as far as I understand, a global production weighted mean is higher than the 0.2. So yeah, talk to me about the grade of this asset.
Yeah. So what you have to remember is there's really two different types of mineralizations of tungsten. There's scheelite and there's wolframite. The nice thing about wolframite, which is what we have, is it's easily separable, and it tends to have a much higher recovery rate than scheelite. So you might see much higher scheelite grades, for example, but it's much harder to separate, and their recovery rates are much lower. So when you look at our deposits in Portugal, I think they're most comparable to Penasquara and the Almonte deposit in Portugal. And that is essentially about the same grade. It's about 0.21, 0.22%. And whereas we're just doing mechanical separation, these other projects tend to have a much larger chemical portion of what they're doing as well. I mean, if you look at, you can look at those projects, and the energy costs associated with them are actually quite large. So they tend to be high cost producers, whereas just doing mechanical separation is a relatively simple thing to do. So overall, I think that we can assume that this is going to be low grade, low risk, that turns into a very profitable and predictable concentrate. Over the life of Beralia, they produced concentrate with an average grade of 66%. I would think 100 years later, with the technology that we have today, the equipment we have today, that we're going to be able to produce a 65% grade relatively simply. So we know, in our case, we know that the deposit's there. We know that it's extractable. We know that the recovery rate is excellent. We know that people love Portuguese wolframite, and that this is a deposit that has been used widely. And we've made samples. We've shared them with smelters. That's why we have an LOI with GTB. And they look at it and they said, this is great. This is good, solid Portuguese wolframite, which everybody loves.
When we're looking at something like Almonte or even New Ifao, I believe is another asset that produces similar grades and makes money while it has similar 0.2% tungsten assets. But they also sell other stuff, like Almonte sells copper and tin, I believe. New Ifao sells fluoride, bismuth, copper as well. Is that something you'd be expecting to putting out as well in order to make this, bring it closer to profitability?
Well, it's going to be, certainly we're going to be able to get credits for our copper, for our tin, and the other secondary elements there, but we don't need them to be profitable. Our profitability rate based on tungsten, which is now approaching $450 an MTU. I have to say, when we started this, it was probably around $300 an MTU in 2023. So, the prices have increased, quite substantially as well. But we don't need those other metals to be profitable, but it certainly will add to our profitability. Even the way that we're looking at it right now, we're talking to the, we were talking earlier about the inert tailings that are there that were being used for landfill for road aggregate. We're talking to companies who want to buy those tailings for road aggregate as it's being produced. So there's various ways that we're actually going to be able to increase the profitability and decrease the capex, because in that case we're going to need less space because we're always going to be shipping out road aggregate. But fundamentally, this is a project that stands on itself and is profitable just producing the tungsten.
When do you think you're going to know more about the rest of it? Copper, other metals. When are you going to do some met work to see if any of it is recoverable?
We're doing work now. We know it's recoverable, but certainly on the smaller size plant dealing with 150,000 tons, it's probably not going to be worth separating it out at that point. We are going to have to separate out the tin just because you do get a penalty for that when you're shipping tin with tungsten to the smelters. But we're doing a pre-feasibility study, which will probably be ready in October, and I expect a lot of it's going to be in that.
Okay, so a pre-feasibility study before the end of the year, is that right?
Yeah, absolutely.
Okay. Are you expecting any elevated? Because you mentioned penalty, so any elevated arsenic or cadmium or anything else that you're expecting here?
No, we aren't. And as I said, we've got about 80 years of operating experience to know what's there, but there doesn't seem to be any issues around that currently. We've been making concentrate samples, and we've been testing it, and we're pretty happy with the quality. They all seem to fall within the parameters that the smelters are looking for.
What are those parameters? What's the impurities that I showed that would trigger penalties under your current LOI?
Well, there's a number of them, and every smelter is a little bit different depending on what they're looking for. But certainly everything is a range. So you have to just fall within that particular range, and if you're able to do that, then they're more than happy to buy your concentrate.
So that's gonna that LOI they have right now, is that gonna change as you go into the PFS, or when do you think you're gonna upgrade that?
Well, my expectation is that's going to change and actually become more robust as we're able to move towards the construction and production from the smaller plant. It's sort of chicken and egg between financing the smaller plant and having a what I'll call a full offtake agreement, because obviously they don't want to commit. The smelters don't want to commit to including your material in their production schedule until they're certain that you are actually going to be able to deliver that concentrate to them. On the other hand, it's much easier to finance the construction of that plant when when you have a solid, some say bankable offtake agreement in place. So there's a little bit of negotiation there. Everybody has been to date very amenable to the idea of working together and finding out a solution, sitting down and finding a solution that works for both. So I would tell you that my expectation is that LOI will become more robust in concert with us being able to announce financing around that first plant.
Mm-hmm. I guess strip ratios are also important in these situations where we're talking about grade and potential profitability. What do you think is, or what has the strip ratio here on the breccia been historically? Because I know you're thinking about quarry style mining, so it's so different. But what do you think that's going to look like?
Yeah, I don't think I have an answer for you on that at the moment, but that's something we can certainly check with our with our technical team and get back to you on.
Yeah, and I guess I might have to be patient for it to see the pre-feasibility as well. But back on that business plan of yours, and I understand it'd be hard to answer this question, but how long could that plan take before you're actually making money? I understand PFS this year, but then on the back of that, what happens? And again, very forward looking, and anything can happen in between. But how long will it take for you to make money?
Well, the payback period on that small plant is at current tungsten prices is less than 1 year. Mm-hmm. I can tell you that our focus on that smaller plant, as attractive as having that cash flow is for mitigating dilution to the shareholders, the real reason we're doing it is to manage the risk before we build a much bigger plant in terms of the 1 million ton per year facility that we want to put on Borealia, and also insinuating ourselves into the production schedules, as I mentioned earlier, of these smelters, so that they can get a large level of comfort with the concentrate that we'd be producing from our deposits. And that way they can be there in a much more aggressive and robust way when it comes to financing the larger plant. Mm-hmm. So immediate profitability is not really the primary object here. The primary object is to mitigate the risks around the bigger facilities that would be producing at a much larger scale.
But so realistically, what are we talking about here in terms of shipping concentrate? Is it a 2026 thing? Is it a 2027? What are you thinking?
I think we could be shipping concentrate 6 to 9 months after we have the financing for our smaller plant finalized. So I would think 2026 is probably a very fair time schedule for that.
What about permitting in that case? Like, when would the APA's evaluation of your EIA have to be done in order for that to be feasible on time? In order to be shipping concentrate in 2026, when would all the permitting have to be in hand?
So we have the permits required for the smaller plant, for the $5 to $7.5 million facility. For the larger facility, my expectation is we're probably going to be have our final environmental assessment submitted and approved sometime in the second quarter of 2026.
Okay. What does that process look like? Maybe walk me a little bit through how that permitting process looks like in Portugal, because it's a bit of a different jurisdiction than we typically deal with. So I know that you have those permits in hand, or some of those permits in hand, but what does the rest of that process look like?
So the permits that we have in hand are what's required for the smaller plant. For the larger plant, obviously there's a larger threshold there that once you're producing above a certain level, then it's a much more it's a much more robust process that's required in order to get permits, and that's the case for our million ton per annum facility. We've started that process already, submitting mining plans, and as I said, we've been doing water studies. Our environmental assessment process is well underway. It's really something that's being led by our team in Portugal. João has a long track record of successful mine openings, so he is really the key guy to talk to in that respect. I can tell you that we're doing everything we can, both in terms of the local government and the federal government, in order to make that process as simple as possible, including we are trying to become nominated as a project of national interest, which expedites all the permitting processes and all the funding processes that would be otherwise available.
Mm-hmm. What about the, because as I understand it, and we'll talk about your plans for exploring it, but what about the exploration permits that you'd have to obtain to do step outs and stuff like that? What does that process look like?
I think most of the exploration permits are in place. I can validate that with João for you. But we're doing our second exploration campaign right now. We did a 4,000 meter campaign as a private company. That's where we got our current resource from. And right now we're in the process of doing a 5,000 meter campaign, and we're hoping to increase significantly the current resource that we have right now. But the exploration campaign is well underway.
Okay, and we'll talk about that for sure. But just still sticking to the business plan, if you're shipping concentrate in 2026, including the capex that you told me about, that could get up to $7.5 million US, how much money are you going to spend between now and then? And again, including everything. So the corporate G&A and everything else, how much money are you going to have to spend in the meantime?
We're probably looking, if you include everything to get us to shipping, which includes everything from the G&A to the exploration program, which we're now doing, to building the $5 to $7.5 million facility, we're probably looking at somewhere in the north of $10 million.
How much money do you have right now?
So we just did our financing of 4.6. In that, I've included, in both those numbers, is included the 5,000 meter campaign, which our expectation is going to be around $2.5 million. So we've got a $2.5 million campaign, let's call it, on right now. We'll be done it by the end of July. We've got that pre-feasibility study that we're working on. We think added value from those things is going to be quite significant. And the other focus, which we're speaking to people about right now, is on the building that smaller facility that would lead us to shipping concentrate in 6 to 9 months after its financing. So all of those things are included. Some of that financing would be equity. Some of it would be non-dilutive, especially around that smaller plant. And but yeah, I think saying north of 10 million is accurate.
Mm-hmm. North of 10 million on top of the 4.5 that you have right now, then, or is it that including?
No, I was including everything.
All that works included. Okay, so essentially, you have to raise less than $6 million more before you're shipping concentrate. That's what it comes down to.
Depends how big we build the plant, but I would think that the 10 million number is I would say it's less than 10 million if we don't include what we're doing now. It's more than 10 million if we do.
Okay.
When I have a range of $5 to $7.5 million for the plant, which is based on preliminary estimates right now. It's a pretty big range. I realize that, but that's sort of where we are in terms of a plus minus range at the moment for the plant.
Do you want to sell a royalty on it, or why not? I mean, it seems like this might be prime time to go looking for a royalty and finance it that way, which is a little bit of top line dilution essentially.
Right. I mean, it depends, right? I'm a shareholder. I want to look at what the best deal is for the company and what the best deal is for the current owners of the company, which is the shareholders. So it will depend on what the cost of that royalty, just like it would depend on what the cost of doing any other type of structured financing is, whether it's convertible debentures or straight debt or royalty. So we're open, and right now we're listening to various people who are proposing various ideas to us about financing the smaller plant, and quite frankly even talking to us about financing that bigger plant.
Gun to your head, if you had to take a decision before the end of the workday, which route are you going? JV, royalty, debt, equity? I mean, there's many options, but what would you prefer?
I think, gun to my head, I would do a structured debt deal, but that again, devil's in the details, and the just qualifying it in one category as another is not going to be enough. I mean, it also depends on who we're working with and the partners and that type of thing as well. So it's I don't think it's as easy as just categorizing it. Let's go A or let's do B, but we're certainly seeing all of those things right now. I mean, I was in New York last week, and we had 4 or 5 different ideas put in front of us, and we're speaking to them right now, and they're looking in a more focused way on our financials this week.
Well, you also recently had a news release about the work that you'll be doing in the meantime. Some of it is exploration work. So talk to me a little bit about that. What is it that you're doing right now?
Yeah, so as I had mentioned, we've started a 5,000 meter drilling campaign on Borealia, supplementing the 4,000 meters that we had done as a private company. We believe that we can increase the current resource estimate on Borealia significantly. I think we would like to get that somewhere past, the 20 million ton mark. When you're proposing building a 1 million ton per year facility, it would be nice to have 20 to 30 years of mine life already identified for that facility. So we think that by the end of July, the drilling should be done by the end of July. We will be in a position where we'll have, I like to think, a 20 million ton current resource estimate at hopefully around that same grade as we have right now, so north of 0.2%.
Well, I also see that you're going for 100-meter spacing on the drill plan. Is that going to be sufficient to convert inferred tons into indicated, or what's the goal here with this 100-meter spacing?
Again, I'm not a geologist. I'd love to put you in touch with our team, and I think they would be able to describe that much better than I could.
Yeah, I'm basically trying to understand the goal of this drill program, because I can only see 2 holes that are kind of outside of the red breccia outline that you have on that map.
Right. Sure. Yeah.
Are you why only stepping out with just 2 holes? Like, why not? Well, do more, grow the resource more before you actually move on, or what's the reasoning behind this?
Right. So again, I'm not. I don't want to put myself in a position where I'm going to say something. I'm not a geo. I'm a banker by trade, but certainly our goal is to grow the resource and we think we can grow it significantly. But we'd also like to uh, move whatever we can from less certain categories to more certain categories. But our primary goal is to grow the resource.
Okay. Yeah, I think they're also going to be running again a gravity recovery test. But as I understand it, the historical benches and the waste dumps and even the near surface breccia at Barala and
Yeah.
Valadas Gatas, they've been exposed to the elements essentially for again over 40 years now. So
Right.
what do they look like when you go there and when you look at them? What do they look? Are they mixed with secondary oxides and hydrations or hydration rim from the outside, and what do they look like?
The the breccia itself is, it's not really been exploited historically. I mean, it's there. They know it's very rich in tungsten. If you speak to the old miners, they tell you, well, whenever we needed to increase the grade, we would go to the breccia. But the focus, especially at Boralia, has been around underground mining. Um, Principally because there are a number of veins that have been followed, but also, as I had mentioned, because it's closer to the population areas, our focus is more on operating in an underground facility, as was traditionally there, because it's just easier to get permitted because it looks like less of a scar on the landscape, at least while it's operating.
Hmm. When do you think that work is going to be completed that you're doing right now?
So the drilling should be done by the end of July. Normally, we try not to drill in August because it is a fire hazard month in Portugal. So we'll see what the weather's like this year, but we think we're going to be done by July, end of July, and then that work will be captured as part of our pre-feasibility study, which I think will be done end of September, beginning of October.
Fires is something that I did want to ask you. That's something that we see in the news here in Belgium a lot when it comes down to Portugal. Is it? I mean, is that something that could actually, stop you from working or come on site, or how's the fire situation?
Well, the fire again. That's why our expectation is not to drill in August. We haven't had any issues where we are. In fact, the last few times I've been, it's been actually pretty wet there. So we'll see what happens. But certainly, coming from Canada, where you can't drill 6 months a year because there's 6 feet of snow, the idea that you're only held up one out of 12 months because of a potential fire situation is actually quite a pleasant change of events that leads to much better efficiency when it comes to operating.
What about getting the drill on site? What does that look like? I looked at the topography profile here. It seems like it's hilly, so there's hills, but they don't go too high. 1,300 meters is what I noticed. Maybe I have that wrong or not. But talk to me about the topography as well as accessibility of the spots that you're going to be drilling.
Drills on site. You're right. It's hilly. It's sort of like rolling hills. It's not so much sharp cliffs or anything like that. So you can drive up on top of the breccia relatively easily. There's paved roads that go right up onto our properties, so that's not an issue either. I mean, there are, when you look at Boralia, there's not really a lot of trees there either. I mean, most of this, as I said, is a maybe it's because it's, as you were saying, 1,300 meters. Maybe it's because it's high up, but there's not a lot. I mean, there's some bushes and that type of thing, but there's no large trees that have to be cleared as if you were in the boreal forest or something.
Okay. What about I recently went to Tasmania on a site visit, and one of the issues or one of the challenges that they had is finding line cutters, finding people who actually want to do that work. Of course, it's a completely different profile over there. The Tasmanian bush is really tough to cut through, apparently. But what about that's reminding me, when you told me about clearance and stuff like that, it's reminding me to ask you about skilled labor. Is that something that you're going to be able to find in that part of Portugal, either now or when it comes down to actually producing concentrate?
Yeah, I don't think there's going to be any issue finding skilled labor on all sorts of levels. I mean, we're a 30-minute drive from Braga, which is, you know, the third largest city in Portugal. It has universities and trade schools, and we're like an hour from Porto, which is the second largest city. It's also a very traditional mining area, as I said, and you know, there's a lot of people working in those type of trades, both with heavy equipment, but also in rural areas with those type of skill sets. So my expectation is we're going to have locals working there, and it's going to be essentially very Portuguese labor force. There's not going to be any real need to go out and source people, I don't think, outside of the region.
What about power and power availability? Again, you talk about infrastructure, but when it comes down to mining, you might need, you know, larger infrastructure, essentially, especially when it comes down to power. So what's the power situation there?
Well, we're pretty fortunate, actually, because Portugal, unlike a lot of European countries, has a quite robust hydroelectric dam system. And we're about 2 kilometers from the second largest hydroelectric dam in Portugal. So there's you know, as existing brownfield properties, we actually have, you know, hydroelectric lines running right across the property as well. So access to power and relatively low cost power, I think, is one of the big advantages that we have here. I mean, certainly you look at, I can think of some tungsten projects, like if you look at Tungsten West, for example, in the south of England, they ran into an enormous problem because they were dependent on a natural gas sourced from Eastern Europe. And when those prices exploded, there was just no way that anyone could have made that project profitable. We don't have that issue. Portugal has a tremendous amount of very close by clean hydroelectric power.
What's the size of those powers? I mean, can they carry a mining operation? How many megawatt hours are there?
I mean, I don't know the exact those exact figures. I can certainly find those out for you. But you know, the dams are quite large, and there's more than enough there for what we want to do. Okay. Our process, which is basically crushing, grinding, and gravimetric separation, is not something where we have, you know, like very high temperatures are going to like require a large amount of power. I mean, if you look back historically, there was a smelter on the operation, and that smelter actually has its own hydroelectric facility as well, a small one, but you know, we'll see. Maybe we can acquire it as well. But without doing any smelting or anything, there's not a huge power demand that we're going to actually require.
Yeah, that's. I don't necessarily need a specific number on that. Essentially, what I'm looking for here is: are you going to have to put in extra capital, you know, extra capex to put in a new power line or anything like that, or can you sustain the operation as is?
Yeah, I think there's probably going to be a new power line for sure, but you know, it's going to maybe a kilometer or two, okay, which is not going to be that expensive, but it's part of the of what our projected capex is right now for our larger facility.
Okay. Yeah, that is an interesting situation. I asked you about, you know, I asked you to include the G&A in that number estimation that you told me about. What do you think that's going to be? What are you going to be running for administrative expenses?
As part of the larger facility
I mean, from now on out, like what is your G&A right now versus, you know, where it's going to go as well?
Yeah, our G&A right now is about maybe $50,000-$60,000 a month. But and the vast majority of that is our geological crew in Braga. But what's that going to cost us moving forward? I don't know. I would expect most of that is going to be somewhat associated with the actual operation of the plant, the overall top level administration, et cetera. Once we have that established, which we don't yet, I mean, it's going to be pretty consistent.
That's actually a good point that I might have, or I should have asked you before. What about government funding? I mean, is because this is critical metals. Is there an opportunity for you to take U.S. money or European money in any shape or form to develop this?
The answer is yes, and we're talking to both those parties, both the Americans and the Europeans, about that. My personal opinion is government money takes a long time. The regulatory and accounting submissions that you have to make for it tend to be heavy as well, and that in a lot of cases it's more about submitting receipts and getting reimbursed than it is about providing you with the money to buy things. So you actually have to have the money first. So it's good to have, and we're hoping to have it. But fundamentally, the development of this project is going to depend on its appeal to private sector investors who are looking for a profitable project, and it can be expedited by the government. And certainly, there might be an opportunity for additional offtakes with governments who have strategic reserves of tungsten that they want to increase. So we're working on all of those things, but government moves at a different pace than the private sector, and we're not going to be able to change that. So we're working in parallel in both fields of funding.
Moving at a different pace is putting it very, very mildly, especially when it comes down to Europe. I find that we're bogged down in regulation, too much regulation, really, quite often.
It's not just Europe, the everywhere, and it's a real problem for the mining sector for sure.
Yeah.
I mean, permitting is an example of it, and we have the same problems here in Canada as in Europe, but the government. I'm an optimist, and I'm hoping that's going to change.
What else is a problem or a challenge, or what else keeps you up at night? Because I mean, you're kind of presenting this as a simple story, or at least what I'm getting from this initial conversation, just really getting to know the company, is that simple, start small, grow production type of story. But what else? What's the challenge here? What's the catch? What keeps you up at night?
Well, the reason I try to do that is because I think where you get yourself in trouble is when you're trying to manage too many variables at once. So when you're trying to capture all the revenue, or you're trying to capture everything you possibly can, you want to do something new or technologically advanced. That's when problems occur, is when you have too many variables that you're juggling. Here I try to keep it simple because it can be a very simple, profitable story. And by doing the same things that people have done there from 100 years ago, they were able to quite successfully make a metal that today sells, that's under high demand and sells at a very high price. So yes, that's fundamentally the story. What keeps me up at night is, I'll tell you, is timelines, because time ultimately is money. And whenever you're relying on other people, whether it's governments or financing or what have you, everybody in this industry, we operate within a window of opportunity. And when that window, we never know when the window closes, and we never know when it's going to reopen again. So it's a bit of having to do as much as you can in a short period of time to create value for your shareholders. And so for me, that's the thing that's outside of our control, is the time that things take, whether it's from government or third parties.
Well, what about telling the story? Could that be a challenge, because it is different? It's not as widely talked about. We joked about it at the beginning that promoting high grade gold in a new jurisdiction might be easier than tungsten. What do you think, or what do you do for marketing and telling this story?
Yeah, you're absolutely right. I mean, it's not gold. And, when you're doing a gold project, no one ever asks you, well, what's it for? Right. Like, and the answer is probably not very much. I mean, it's a treasury metal and it's jewelry and that's about it. And tungsten's for so much, but as soon as you bring up tungsten because it's a less known metal, it's like tungsten. Like, what do you use that for? So there is this educational process that you have to go through. But the good thing about it, once someone decides they need gold in their portfolio, they still have like 1,000 companies they have to choose from. Once you decide that you need tungsten in your portfolio, you don't really have a choice of a lot of companies. I mean, there's very few, comparably, there's very few tungsten companies. So the challenge in terms of marketing here is to get people to understand the value of tungsten. Once you do that, and they feel they need it in their portfolio, then I think it's they look at you because they don't know of any other companies. So for me, it's just a different way of marketing. And I actually kind of like the educational approach because it comes off as not so much as the used car salesman when you're just like trying to get somebody to invest in a piece of moose pasture. I think here where we've got such a long history of tungsten mining and people's concern is but what's it for? It's easy to demonstrate, especially when you have the president of the United States running around the world looking for critical metals and threatening to take over other countries because of it. It's easy to see that there's a huge demand and value for it because of that. So it sells very well in that respect, for sure. And certainly as the price continues to go up, it tends to validate what we've been telling people, that the need for it and the demand for it is ever increasing.
Well, this couldn't be moose pasture because there's no moose in Portugal, I guess. So that already eliminates it. What is there? What kind of animals are you guys dealing with there?
What type of animals?
Yeah.
There's not a lot of issues around animals. One of the things we do from an ESG perspective, however, is as you might know, the national animal Portugal's the Iberian wolf. Iberian wolves are still in northern Portugal. They tend to be bothersome to people raising sheep and cattle and that type of things. So we've been working with a local charity to provide dogs to farmers to chase away the wolves rather than having them shot. Those type of things. But there's no real animal issues. We don't have any grizzly bears either, but I have seen some horses and other things that seem to be running around wild up there, but there's no animal issues per se.
Iberian wolves are smaller, I think, than your typical gray wolves. That's what I was thinking. But
I think so. Yeah, I haven't actually seen one myself. I'm told but they're no timber wolf. Let me tell you.
Yeah, that's good. Well, and so to the point of the marketing question that we were just talking about here, Roy, is that it might sound like a silly question, but I'm often noticing companies that are not gold, silver, copper, something that's easily explained, struggling to get full value for their asset. And so that's why I asked you about marketing. But where do you go for that marketing? Like, what's the audience that's most receptive to this story? Is it mostly European, investor base that you're after? Who do you market to, and how do you get to them? When I ask how, I'm talking about, is it conferences plus digital, or what's your mix there?
So there's a combination. I think initially Europeans are more familiar with tungsten as a metal than North Americans. I think part of that has to be because there's been no production of tungsten in North America for 15 years. So there's no analysts following tungsten stories in North America, and they're not talking to funds about it. So there's a lack of knowledge in that respect. I think that's changing just because of what's the geopolitical circumstances that we're in. However, what we've been doing since we've been listed, which, as you know, has not been very long, is we've been certainly going to investor conferences, introducing the story, talking about the metal and our company. So that's phase one. I mean, it's June 17th today.
Yep.
And, the conference season is pretty much over for the summer. And, our next step is to develop much more digital media, which is, I think, as well another type of investor as well. Not everybody relies on digital media for investing advice, but there's more and more an important sector of investors that do. So that's another thing that we're developing. We're also continuing to talk to potential analysts who would be interested in following this story as well. It's hard when you're just been listed for 4 to 5 weeks. You don't have the market cap or the gravitas of a more established company, but it's certainly a part of the company creation process that I enjoy. Is that initial startup and validating what we're doing, not only to the investing public, but to other companies in the tungsten supply chain. And by working with both of those, we were actually increasing our profile and our value as perceived by the others. So, the more we're able to show that we're accepted in the investor community and have a market cap of some importance, then I think others in the sector look at us more favorably. And the more we're able to do with whether it's a smelter or a JV partner or somebody else in the tungsten field, then the more interesting we become for investors. So it's a circle.
What do you want to spend on it, though? What would the budget be for you? Is that already fixed, or what are you looking to spend on telling the story?
I think we're probably our spend initially on this year. We're probably going to spend about $500,000, I would think, all in terms of telling this story, and that's the hard part is getting that initial takeoff from the runway. I mean, you spend so much more money getting in terms of liftoff, get off the ground, and once we do that and we have a profile, then we can reassess where we are. But certainly we've gone out, we've told the story. We'll continue to do that. Our stock has reacted pretty well to date, and we just want to keep that going because, as I said, we think that we can get. We think we're undervalued, and we think that we can get we'd like to raise money in any way that's like less dilutive to our shareholders. So it is an important part of running a company to actually have the investing public understand what you are potentially worth, because if you don't have that following in the public market, then everything becomes much more expensive.
Yeah. Yes, exactly. Especially that last part. So it'll be interesting to see how that develops and how much interest you're able to attract for this. I mean, Almonte has done I think a decently good job because people bring that up often when they think about.
I mean, you look at that story; they were probably about spitballing this, but if they're probably about $250 million market cap this time last year, and I think they're close to $1 billion market cap this year, and they've made some great moves. They have. Their timing has been fabulous, and I think that underscores, the attention that the tungsten market is getting now. But they've certainly done a fantastic job for sure.
I think it's a bit better, more than that. I think they were a 60-cent stock about 52 weeks ago. They're a $3 stock now, right? So it's gone 5x, which has been impressive to see. About $1 billion market cap now, though. I mean, so it's not. I mean, it's relatively, it's not a low market cap, so to put it. So it's interesting to see how you're going to develop this. When do you think the next time is going to be that you and I are going to talk? When are you going to have something new to tell me?
I think we can have something exciting to tell you within the next couple of weeks. So stay tuned. We are working on a couple of things that I think are going to be interesting and underscore some of the things we talked about today in terms of the importance of of tungsten, not just in Europe, but in North America.
What do you think? I'm forgetting to ask you here again. It has been more of an introduction to the company so that I can get to know it better and put it on my watch list, follow along. What do you think I should be asking here that I haven't been able to do so?
That's a tough question. I think I think what's always interesting is comparables and how we compare, not just in terms of value, because value is one thing, but in terms of development, uh, in terms of the other tungsten companies that are out there, and why Allied as opposed to any of these other companies would be where you want to put that portion of your portfolio that you want to invest in tungsten.
Well, it seems like there's going to be enough to talk about soon, and maybe we can pick that conversation up then as well. But I really appreciate you sitting down with me. And if people who are listening or watching to this have any follow-up questions, please let me know. Put them in the comments or whatever, and I'll make sure to ask Roy next time I speak to him. So, Roy, thank you so much for sitting down with me today.
Thank you, Antonio. And I know there was a couple of questions that I wasn't able to give you a fulsome answer for. Make sure I get them by email, and I'll have my guys answer them as soon as we can.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."